is the big question. We have Ravi Kapoor, who joins in from PwC, and we also have Sachin Dixit, who's the lead Internet Research Analyst at JM Financial. Thanks a lot, gentlemen, for joining in. Ravi, three things that really stood out for me from the report that you said. 60% of the traditional retailers perceive online shopping as a significant threat. The second part is that while e-commerce is likely to grow 22.5% over the next 5 years, traditional retail is likely to grow sub 8%. So, I mean, what are we looking at in terms of the overall pie expanding, or is it just channel shifting which is taking place? And in light of that, how do you view company strategies?
Well, thanks, Mangalam, for this opportunity. I think the prognosis is very clear. If you really look at the overall personal consumption expenditure in the country, it is growing at roughly around 7 to 8%. So clearly, there is a shift which is happening from our traditional channel mixes going into the organized channels in general, if I call them that, which is a combination of organized brick and mortar as well as the quick commerce and the overall digital commerce players. So clearly there is a move which is playing out in this shift, and what we are seeing here is that, like everything else, it's not evenly spread out. You cannot average out, or you cannot create a macro picture out of this trend. What we are trying to say here is that the way it is playing out for smaller traditional retailers in tier 1 markets, sitting in high SEC localities, the playout is going to be very, very different from when you look at retailers which are operating in tier 2, 3 markets, or bigger retailers where they are much more secure in the way they are able to manage this trend of e-commerce becoming bigger for them. So the hand is not evenly played out. There are pockets where we see this to be much more severe. And what it essentially means for brands is that you need to now take care of more dynamism, more complexity in the way you're looking at your channels. Clearly, we see as the overall growth story of India plays out, we see the organized channels becoming bigger. In fact, our sense is that in the next 5 to 6 years, organized channels should become 30% of the roughly 1.8 trillion retail market that we believe India will become. So clearly, something has to give. And clearly what we see is that the bottom of the pyramid is where the maximum amount of challenge is going to be for Kiranas. And there are ways in which Kiranas will have to really reinvent their business model. And that is what we have tried to cover as to what one can do to really play this out.
Sure, but Ravi, got your point. And I guess that challenge is far more pronounced in urban centers, right? Which is where we're seeing a greater adoption of e-commerce and quick commerce. But back to that central point. So does the report, finally come to the conclusion that right now e-commerce, let's talk urban centers only, that right now e-commerce is not really growing the market. It's only distribution shifting from one channel to the other. Is that what your report is finally indicating?
So it is not exactly that as well, right? Because overall retail is growing in India. Overall retail consumption is growing. Our sense is growing anywhere between 9 to 10% year-on-year CAGR. So overall pie is expanding, but there's a disproportionate shift in certain sections of the consuming economy, which is being taken over by the e-commerce channels. That's the way to interpret it.
I think in that, gentlemen, morning, Prashant here. Ravi, in that report, you talk about the Jevons paradox, right? I think the last we heard that was from, I think, Satya Nadella two weeks back, and that paradox shot into fame. But interesting highlights, an interesting report, really. Let's bring in Sachin into the conversation as well. Sachin, good morning. So you heard Ravi, and what does this mean for from an investor point of view? I mean, names like Zomato and Swiggy have corrected quite a bit. Do these trends make these stocks interesting and compelling investment opportunities?
Yeah, sure. What is happening is that most of these stocks, right, Zomato, Swiggy being in the public markets, and then also some unlisted companies that are there, everyone is growing very, very well. And something that's corroborated by Ravi's report as well, in the sense like a lot of growth is coming from e-commerce, where quick commerce is rising in overall mix. So a lot of that channel shift is happening. What we are also seeing is that it's not just channel shift that's happening here. There is also a factor of accessibility that comes into play, right? It came into play in e-commerce earlier. Now through quick commerce, you are seeing that when some of these quick commerce players are expanding into tier 2, tier 3 cities, a lot of the brands that were not present there, a lot of the brands that could not afford to build distribution in these areas are now able to access this customer base, and the customer is able to access those products. So
But
that is also playing out. Yeah.
yeah, Sachin, exactly on that point, Ravi's report, actually, I was going through some of the details, and the report also mentions exactly this, that the quick commerce players, they're finding the difficulty a little more challenging in tier 2, tier 3 as compared to urban centers. That's where they have to figure out inventory management, logistics costs. The market is a little more fragmented. It's not as easy or as homogeneous as, let's say, Mumbai or Delhi. And this is exactly where the store rollouts are happening, right? We remember what Blinkit said and what happened to Zomato at the end of the last quarter. I think it was last, when they said that they will be investing a lot more in the store rollout plan. So, given that reality and the whole profitability metrics, do you think that it's good to invest in the companies even as they themselves are still very much in an investing phase, specifically on quick commerce? Sachin?
So what is happening in quick commerce is that you are seeing that a lot of store rollouts are happening. Companies have given guidance in terms of where they want to reach in terms of their store presence. But what is also interesting is that the store rollouts in tier 2, tier 3 cities are very minimal, in the sense like if you look at number of stores per tier 2 or tier 3 cities, that number is probably 10-20% the number of stores that you have in tier 1 cities. So what these
Right.
companies are doing is that they are looking for basically micro markets in these smaller tier cities, opening stores there. And because quick commerce anyways is a densification play, so that's why that's the approach that they are going to take. And which is why when you look from Ravi's reports perspective, where he might be looking at a broader offline retailer perspective in these smaller tier cities, most of the retailers will not get impacted. It will be
What
just that smaller, yeah.
Right. Sachin, what we understand so far from the way any market develops, first is curiosity, then there is denial, then there is, overwhelm, and then there is overestimation. In the Q-commerce opportunity, where are we? Because earlier there was, curiosity whether people want stuff in 10 minutes or not. Then there was denial that, oh, maybe they don't want so many things. Then there was overwhelming stuff that, people are ordering fridges and air conditioners as well. At what point do we lead to overestimation of the market opportunity here?
So some of the overestimation, I'll say, has already corrected, right? If you look at how some of the reports came out in the past 1 year, there were a lot of ambition that was built into quick commerce, thanks to the fact that a lot of players have entered, a lot of profitability guidances have been toned down. So I think we are now after overestimation. I think that overestimation did happen at some point. We are now reverting back to the norm where the valuations look saner, the estimations look more in line, but still, even today, I think a lot of uncertainty still prevails in this sector because there are still players who are trying to enter and try to make a dent to the quick commerce landscape. At one point of time, there was only Swiggy, Zomato, and Zepto who were trying to do anything here. Now we are talking about 3-4 players who are trying to make a proper dedicated quick commerce play. Secondly, we are also seeing a lot of the marketplaces in terms of the e-commerce side who are now moving to a 2-hour, 3-hour delivery, right? Which again tries to play into that quick commerce arena. So I think in that sense, a lot of turbulence is still there, and which is why you have seen the corrections that have happened. Now the bet is like whether you want to play this sector in the sense like look for who is going to be the winner and try to back them up, or you want to stay away from it. So I think we are still seeing some divergence there. Obviously, people are putting their chips on some of the players, which you can see how the stocks have been moving around. But I think the uncertainty level is certainly higher than what we have seen in the
Uncertainty level is certainly high. That is why we got you, Sachin. So from a viewer standpoint, those who are looking at Zomato and Swiggy, what should they do?
So obviously, in terms of where the valuations are, we have very strong ratings on both the stocks. We have buy ratings on both the names. Right, Swiggy's quick commerce play is slightly behind what is there for Zomato, which is why you are seeing that Zomato has picked up in the last few days, and we are seeing Swiggy also remaining, I mean, at least the bottom seems to be capped as of now. But we do have buy rating on both the names, and we believe that quick commerce in this format is going to sustain. There is certainly an market adoption, a customer love that we have seen for the model. So in that sense, I think the story is long enough to be played for some more time.
All right, we'll leave it there, gentlemen. Thank you very much for joining us and speaking to us about what you see as trends here in the space. And we continue this conversation because, of course, I mean, there's a lot happening, newer entrants as well in quick commerce, which we've not touched upon. So people want a piece of the pie, which is expanding. Sachin and Ravi, thank you again. Well, while we've been on that discussion, markets have